things got shaken up on Friday. Indices were lower. Today, we do see a bit of a bounce back. Let's just take a look at the market here this morning, taking a look at the SPX. So you can see there's the damage from Friday. Big push lower here. And this market has been so pumped up. And what I mean by that is things have been really good. We've had a really good couple months. I think the market is and was looking for any excuse to sell off a little bit. I mean, when you get this kind of run, guys, this is the S&P 500 index, 33.5% up in a couple months. You're due for a little bit of a pullback. And it doesn't mean that you have to have one like right away or that timing that is easy. But think about this, right? I said this in a stock video that I did last week on my other channel. But when the markets are like in free fall panic mode, the reason it's really hard to short a market that's already falling dramatically, and the reason that it is really hard to long a market that is already in bull run mode, the reason that those two scenarios are similar is because the expectation of the market is already very sort of priced in. It's very hard to impress a market that goes up every day, and it's really hard to scare a market that's already terrified. Does that make sense? I hope it does. Nick, we didn't get a Sunday setup. Yeah, no, I wanted to do a video, but it wasn't happening. I had a long travel day yesterday, and I've been busy. It's been wedding season and friends gatherings, and so sorry about that. But we're back to regular scheduled broadcast at this point for a little bit. So, anyways, the jobs number, all this, right? That the market was looking for any reason, and it still has potential. In my opinion, you still have room to come down. Do I, am I betting that it's going to go down? Am I shorting it? No. But I think that when you get a market that's in free fall and everyone's scared, it's really hard to scare them further. And when a market is really bullish and everyone's really excited and everything looks perfect, it's really hard to impress the market. Remember that sentiment is very important in markets. And so right now, that NFP report number drops and the market just goes, oh yeah, we're selling, right? So it takes that as an opportunity to sell. Does this mean that the world is ending and that the entire economy is going to come crashing down? Not necessarily. It was a bad print, and it was bad revisions too. That was really where the damage was done, was actually, ladies and gentlemen, in the revisions. If you were confused by what happened on Friday, yeah, we missed NFP. That was a little bit of a little spook, but it was this yellow line, which we show in the software that I'm looking at, shows us revisions, right? Revisions to prior numbers. The one that we got July 3rd, which would of course be June's labor numbers, got revised from a massive beat to a ginormous miss. I mean, disappointing for multiple reasons. Like what is going on? How are we getting the jobs numbers this wrong? Like, that's a huge margin of error. I know there was drama around Trump firing somebody or something about the jobs numbers or whatever, but I mean, it was a crazy report. I had to look twice when I saw the stats coming out. I was going through the airport at the time. So where do we go with this? Does this completely kill the bull case for the dollar? Well, I do want to look at that, but it's certainly not a good one. It takes us going. It was looking like we're like, okay, jobs data is real strong. To now we're back in the camp of weak jobs and rate cuts. What's interesting, I heard somebody talking about this, is that the administration is very much like, the economy is amazing. We also want rate cuts. But the Fed doesn't usually operate like this. The Fed typically says you'll get your rate cuts when the economy is showing signs that it needs them, right? That's typically the way the Fed behaves. And to the administration, to Trump's point, right? Too late. The Fed is typically lagging to a certain extent. It waits for data to start materially worsening before it really cuts rates, usually. So, you know, we got some drama on Friday with the jobs print, and I don't know if you guys saw this, but I posted on Twitter. Essentially, what that meant was one thing: rate cuts, right? Here's the 2-year government bond yield. Dropped substantially on Friday and did not bounce. I mean, that was this right here, guys. This tells me what we needed to know about the NFP report. The market looked at that. The bond market said, oh, yeah, we're rate cutting. So we'll see. I mean, Powell has been adamant about, oh, we shouldn't cut rates. We shouldn't cut rates. If he stays on the shouldn't cut rates point, then I'm going to just flip to being critical of Powell. Because at this point, that just, now you actually have what looks to be truly softening labor statistics data. We need to cut rates, right? So I think that's what the market is telling you that it thinks is going to happen, is like all this dance about like, oh no, we need to not cut rates. Actually, the data is materially starting to show some signs of weakness. Now, it's not all bad. If we take a look at the economic heat map here for US, right? It's not like we're in dire circumstances. Retail sales were strong. GDP statistics were strong. PMIs were strong, stronger than expected in some ways. But that NFP report, you can see it comes in as a blemish on this report. Big miss. Revisions were bad. ADP statistics were a little bit better than expected. JOLTS job openings came in a little bit soft. US dollar impact is back to 50%, so mixed. But to me, this just suggests, okay, well, the Fed really does need to gear up for some rate cuts. We'll see if we get them, because again, there also is the drama around, the politics side of it. And, is Powell going to try and continue to not rate cut, or is he going to give in? Is he going to, I think Powell should acknowledge the data and say that's his reason for wanting to cut rates now. That's what I would do if I was Powell.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like edge finder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
Isn't there like an 80% chance the Fed's going to cut? Yeah, let's look at it. I believe that's right. It jumped big time on Friday. So here is the September meeting. Yep. 87.5% chance that we are going to get our first cut in September. That is the bond market saying Powell's going to pivot. He's going to become more dovish to, essentially make a move. I mean, jobs data, there is risks to jobs data materially weakening that are scary, right? That's how you go into recession, is jobs get lost on a big scale or hiring really freezes up. On Friday, we saw the Russell get smacked pretty hard. Russell down from its peak. You're talking about a 6.5% pullback. We start looking at the S&P 500, just a 3.5% pullback, nothing crazy. Take a look at the NASDAQ. You're looking at 4.4%. Gold jumped on this. Naturally, this makes sense, right? Gold jumped because that jobs data a little bit weak makes the market a little skittish, right? They're like, oh, what's happening? Are we about to see some quick rate cuts? That's the type of scenario that gold becomes a little bit more attractive. So we may be in the stages here of seeing, again, gold backing its way up to the highs here to really break out. That's the sort of catalyst you would want to see more of, is jobs data slipping, rate cuts coming in hot, dollar weakness, right? On Friday, we saw the dollar move lower pretty substantially, gave back most of its, well, not most of its gains, half of its gains for the week. We had a really bullish week on the dollar last week, got smacked down pretty hard here on Friday. The question is this a buy, right? So is the dollar a buy on the dip? Well, let me look at it, because there are certain currency pairs that I may be more inclined to look at a little closer. Actually, I'm going to go top setup simplified view. Let's see if we can find anything on that front. Maybe not. Maybe Edgefinder is slow this morning. Okay, so we have euro dollar getting a bullish rating. That jobs data really helping out the euro dollar score here on the Edgefinder. Weak jobs data for the US, and I think we had actually an improvement in Europe unemployment rate relative to expectations. Aren't rate cuts bullish for the dollar? Nope. Rate cuts are usually bearish for the dollar or for the underlying currency. Could be ECB cutting rates, whoever. Pound dollar still getting a very bearish reading, or a bearish reading, not a very bearish reading. -7. Employment data did tick in favor of the UK here due to that Friday number. But I do like the idea, the prospect of potentially picking up a short position. I took some profits on my pound dollar short last week. We do have a bounce happening in the pound dollar. You know, this might be one where I join the trade again. I do like the idea of possibly looking for a short setup in a move up to this 1.34 level on the British pound, finding some support in this area. That doesn't surprise me. You had a little bit of an oversold factor here going into it. Weakness on Friday, but you can see why I like this pair. Look at this. Other pairs bounced way harder than the pound dollar, right? Look at euro dollar. Excuse me. Here's euro dollar, right? Euro dollar bounced hard on Friday. And so look at this relative strength, right? Euro dollar just completely ripped higher here without much effort. Pound dollar, on the contrary, did bounce, but it was not nearly as sharp, right? So I actually like that relative kind of weaker bounce from the British pound. If we kind of make our move up into this area, this may be a short for me, depending on what the Edgefinder has to say. What about Russell, Nick? Buy now? Russell is not, let me see. Let me just look at indices for a second. I think NASDAQ's our only bullish one. I haven't even looked at the commitment of traders data. I'm doing a lot of catch up here this morning because I was out for the whole weekend. Let me just, what is going on with the Edgefinder today? Maybe it needs a refresh. But yeah, pound dollar possibly interesting. Why is NAS bullish and not SPX? What are the different variables? I figured they usually run together. Yeah, Lana, so that's a good question. The main thing is a lot of times it's actually comes down to sentiment and the commitment of traders data, right? Specifically. So if I go like look at COT data, let's just see what took place. Like this week in the NASDAQ, there was some accumulation, some buying, more so than shorting. SPX also, but here's the thing, right? So the Edgefinder scores this. It looks through a bunch of stuff, and it's still saying, look, Edgefinder spotted that the SPX is still very overall shorted by institutions, right? 62%, 63% of positioning on the institutional level is on the short side. Only 37% is on the long side. So it's saying that one is a little bit more short heavy for institutions, but the NASDAQ tech trade seems really strong by institutions, right? So the Edgefinder automatically went and scouted that out. So you're asking, how is this Edgefinder, why is it picking NASDAQ over SPX? A lot of it is, okay, it spotted institutions are more bullish on the NASDAQ than on the SPX, right? It did that for us automatically. Show up to the trading desk that's already been scouted out by Edgefinder. That is what the Edgefinder does. Is it digs through all the data and generates ideas. So that's one component. There's also, of course, market sentiment in the sense of the put to call ratio, right? So SPX showing us this is actually sort of a contrarian bullish signal. We had a big spike in fear on Friday. that actually is very interesting to me. So you got a big spike in fear. People bought puts on Friday big time. Take a look at the NASDAQ. NASDAQ not nearly as extreme, right? I thought that was kind of interesting. So this actually is a little bit more favorable towards SPX because you have a more kind of crowd sentiment seems to be a little bit more shorting the S&P. So all of these things, right? What the Edge Finder does, what it is, the reason it is very why the Edge Finder is the utility of it is it looks through a ton of economic data, technical data, and sentiment data, COT reports, retail positioning, like we just talked about, seasonality, trend of the specific asset, right? A lot of this stuff impacts SPX and NAS very similarly. This stuff, however, sentiment and technicals can diverge between the two of them, right? What API do you link with the Edge Finder? Many. We use lots of different data sources, lots of different inputs to the Edge Finder. Taking a closer look at gold, it's stuck in a range. I had somebody comment on my video on Friday, and they said, Nick, you were so wrong about gold. And I was like, I don't know how else to say this, but I have been so adamantly like neutral on gold recently. There's just not a trade for me on gold at this time because this chart just does not give me any sort of clarity. I mean, look at this chart and you tell me, you know, is there a clear trend of which way the market is going here? And for me, the answer is no. And it's like I trade when it comes to like momentum trading, which is, you know, one of the two main strategies that I use. I use a mean reversion style of trading more on options and Forex. And I use a trend following strategy on gold, silver, oil, and indices. And so, you know, when I look at gold, I'm reliant on a move that has follow through to it. So when you have a chart that is stuck in a very tight range, I guess it's not very tight. I mean, this is a move of 6% range. 6% range back and forth in gold for the last few months. To me, it's just like that is not an environment where I can take a really high value trade. And I don't, you know, I just prefer not to try and like short the rallies. Like if you were doing this, then you probably did great, but that's just not how I trade. So I look for, right, this kind of move, a breakout with fundamentals aligning, sentiment starting to get bearish up in these areas, people betting against it. Give me that pullback. That right there is a high probability trade that I've done really well with over time, right? Aligning the fundamentals, the sentiment, technicals, give it all to me at one point, and I am going to probably take that trade. I'm going to put some risk on it. But a choppy range bound market, I feel like this thing has probably robbed a lot of money from people just trying to like impatiently trade gold. There's just not been a move either ways. And I know it's not like it's not particularly favorable to my content either to be neutral on gold. I'll be straight up with you guys. Like my views typically go up when I'm more opinionated and have setups on gold. I know that's a weird thing to think about, but from my perspective as a content creator, a lot of my audience really likes gold and the NASDAQ. If I have a strong opinion on those things, my content typically is more interesting to people. And when I'm neutral on gold, it does not sell very well in terms of views. But it is the honest take that I have for gold at this time. I want to be, you know, I love trading gold when the environment is right. But the key part in that sentence is when the environment is right. We can't be forcing trades. It's going to cost me more than the ad revenue that I would have gotten if I had a forced opinion on gold. Ad revenue on YouTube is not particularly great like it used to be, just as a side note. But anyways, I don't have a strong opinion on gold, but let's maybe talk about something more constructive. What would get me to be more opinion on gold? Well, we had some starts to that on Friday. On Friday, we had jobs data that materially weakened. It changed the calculus slightly. Let me show you what I mean. When it comes to being very bullish on gold, I am looking for a very bearish reading on the US dollar impact in the Edge Finder's economic heat map page. Also, we did get manufacturing PMIs. I missed that. It was actually weak. Oh shoot, I said that earlier wrong. Manufacturing PMIs actually came in weak. I missed that on we have services PMI tomorrow? That's right, I think. So I want to see US dollar impact to be weak in tandem with a price action breakout, and then I probably take a long on gold. Like I look for a pullback and I long gold. But until I get that set up, I can't really justify what's happening there.
So I really want dollar to behave as it always does, and there seemed to be like, I really wanted to be dollar bullish in August. I think it should rise, it should risk off is there. And then NFP came on Friday, and I'm like, what do I do now? And when I set myself out to trade and I think, okay, what's going to happen here? What's cooking and what's not cooking? Yeah, I think dollar is doing whatever dollar does. And in my experience, it doesn't need to happen, but my experience tells me that we are likely going to fall on dollar, and euro dollar higher, pound dollar higher, ATC and blah, blah, blah. Now, that doesn't need to happen. Currently, we are in a position where I can sell it. Somebody asked me a bit earlier in chat, like if I was to buy dollar. I do. Would like to buy dollar, but as I also mentioned yesterday, about 97.5, and that's about at least 100 pips away from current. Current isn't, in my personal opinion, only a great level to buy from. So I personally wouldn't think of this as a great level to buy from, and because I have seen so many times that when I trade from this level, as I also told, who did I tell? Hi, Samson. You've been with me for a very, very long time. I wouldn't buy dollar at current level. And that's just, I told someone to test. And my testing tells me this is not a great level to buy. That doesn't mean that there isn't a level for you. It's just that for me, I'll rather take a sip of water and enjoy my day. What I do more than anything else enjoy is the yens. And you guys can call me yen man. I know I'm the yen man. And I said I really want this to go bullish, but I fear and I think and I believe we might do that mid-August, and 4th of August is the mid-August, so that's a problem. That's a long time from now, and what should we do in the meantime and all that? It can still rise, it can still go bullish from now. It's just that currently we're not bullish. So what do you do then? It is bearish. And dollar yen just made a new lower low, and it fell on Friday. So are you going to sell in between? All those questions comes from a mind of, I want to trade instead of set up. I also said about early. I said a bit earlier where it's about process. It's about being objective, and current dollar yen isn't giving me that objectivity on a perfect trade setup that I really want us to do. And as I mentioned, earlier, but what I want to mention is I got out about 148 and a half, 148 something, 148.8 something, and 146 and a half, and then we went up to almost 151. That is beyond my control. I don't really care about that it went to 151, other than what is currently going to happen going forward this fall. I really want you guys to plan ahead. Cash space for a buy, I don't really see the reason for buying a range. So it can happen, but it has to develop way more than but okay, cool. Can you please look at pound New Zealand? It's a range. I wouldn't really bother about this one. Because and also for euro pound for that matter, it's the same kind of situation. Is it doesn't really matter what you are thinking in terms of what it should happen, as long as it's in a range over time for euro pound. I don't really like it because it's fundamentally, okay, there's profits here, but I just look back in the mentorship meeting and it hasn't moved since 2013. Yes, there is moves. Yes, there's ups and downs. Yes, there's profits, but I don't thrive in a range. I don't thrive in ups and downs. And to be very frank with you, I really want something strong against something weak, rather than something that's weak and strong at the same time. Euro and pound are quite similar economies and quite, well, it was at least quite integrated. So it wouldn't make sense to me other than, as I would argue, the Euro New Zealand overall could be a candidate, but it would have been a better candidate if and when would you get into a trend would be Aussie dollar or New Zealand dollar. But at the moment they are quite in a range, quite range bound. Doesn't really matter what I do and what I say. So yeah. And what I mentioned about it, what I mentioned yesterday was, okay, I disregarded pound dollar, but I really wanted it to come in higher, to about 135 probably, come in higher and then short, and then take it from there. Because right now, with dollar strength that I'm hoping for and seeing, is not really a great place to sell pound dollar. And we have the Bank of England on Thursday, so that also puts a lot of strain on what generally tends to happen, that it would fall initially and then rise, because I don't think we would have more follow-up rate cuts. Even the rate cuts on Thursday, I'm not expecting more rate cuts to come in, at least for now. So it probably would raise in the end. And with that kind of, I would rather say, okay, 135.5, wait for that. And if it doesn't, then it doesn't, then I don't care. But this identify in my book as end of trend. And until we break 131.15 short term, I've been so many times, like it's kind of like this, right? It turns out, goes lower quite rapidly, pulls back, but then I need to see a reversal before I can think about it. And a reversal here isn't really on the card today, maybe tomorrow, maybe another day. It doesn't really matter when it happens, because I have to have that reversal before I can, because I can look at it. What's for gold? And I mentioned gold a bit earlier, but I previously said that 3280 is a great level to look for a buy, and it ran away from me. I didn't try to buy it, but that would have been a buy, and I probably said it before. But I'm generally bullish, but it's a range, so I don't know. It's back into the range, so it is whatever it is. Pound yen, euro yen has a good great day falling down. It came higher, down up to centipede for today. I didn't short it. Didn't really come up to my central pivot, so it can just do whatever it wants to. And if it falls fast, lower, that would be seen to me as a bullish direction. Somebody else asked earlier today, why is yen strong? I would argue it's the opposite of dollar bearishness. It's not necessarily yen in itself being strong. It's more where does the weakness in dollar go into? And what we have seen today is that not really, okay, a bit of Canada, a bit of pound, but more than anything else, yen, something New Zealand, it's not really Swissy either. So it's really dollar weakness that is going into yen strength, more than anything else. And you can interpret it as Japanese traders or hedge funds are exiting dollar positions and put them back into their own country, more than anything else. So it's more like a short-term move more than a sustainable new direction. Because Ueda last week was very eminent that the economy is quite weak at the moment. They're not seeing any reason to rate hike anytime soon. Market is pricing in 2 rate hikes next year, but everything is weak in the Japanese economy, really generally struggling. So I think this is just it's just that yen fell too hard too fast.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.